They had it both ways. They were like, Bitcoin is too volatile for payments. It's too cumbersome. It's useless for payments. But also, criminals love using Bitcoin for payments. So which is it, right? Like,
there's a lot of people, they want to manage expectations, and they always want to manage expectations to the downside. But with Bitcoin, we do also have to keep in mind that we have to manage expectations to the upside. But it's not impossible for everyone to wake up and finally, for whatever reason, grok Bitcoin and want it, in which case the price would absolutely skyrocket.
If we're looking at an S-curve or a black hole metaphor, that there's a point of no return and that fiat just goes to zero and Bitcoin becomes the global money. It's supposed to be a cult where like we all believe the same thing, but meanwhile...
But no, we're all mad at each other.
Yeah.
We all love each other, but all mad at each other at the same time.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Michael, Pierre, thanks so much for taking the time to do this.
Yeah, thanks for having us, Jeff.
Yeah, thank you.
Absolutely. I remember listening to an old TFTC episode when I was actually in college, walking to class, and Pierre was one of the guests for that episode. And I think Bitcoin was like $4,000 per coin, and you were extremely bullish, which was correct in hindsight. How has it all, played out? Obviously, you guys were into Bitcoin even before that. Is it played out as you expected? Has it been different? What do you think?
Yeah, so that was the first guest interview with Marty Bent back in the day. So I think that was after a bottle of wine. So I think that I probably was very bullish. I think the in general, things take longer than I expect them to. So then that's not specific to Bitcoin. It's not a criticism of Bitcoin, because I used to think that we would have driverless cars by the year 2018, and it's now 2024, and we're still not quite there yet. So I think that, it feels slow going in a sense, but as we'll discuss, hyperbitcoinization is happening. You've got people who feel bearish at 59K, and so it's quite something.
Yeah, I remember years prior, like 2013, we'd think the dollar was going to die in the next 5 to 10 years. Bitcoin was going to take over because it's just so obviously the best money. But yeah, like he said, it does take time to really appreciate. No pun intended. And, people have to actually learn, and it takes a long time for that knowledge to spread, for people to really understand what makes this thing so special. But, here I am also waiting for the year of the Linux desktop still. So
fair. Yep. On the driverless car point, we have Waymos in Austin. I've seen a few driving around. It's pretty wild, kind of scary. We don't have that in Atlanta yet.
So it's starting. Yeah. It's good.
It's coming. It's just like Bitcoin. Where do you see like Bitcoin relative to like the long-term growth of Bitcoin? Obviously, like you said, it's gone slower than both of you guys expected, but where do you see it going, over the next 5 to 10 years?
I'd say it's going to be more of the same. I think the past is the best guide to the future because the fundamentals haven't changed at all. And so to that extent, I think that on one hand, it's going to feel slow, but on the other hand, there's going to be rapid run-ups like there have been in the past. Now, obviously, some things have changed. So, for example, when we look at the halvings and how much Bitcoin is being issued relative to kind of the total market cap, that S2F ratio is changing and favorably. So I think there's an open question as to whether past cycles outperformed because of lower liquidity, and so the price was able to go up more quickly. Or if it's just not a big enough sample size, right? Like it's a sample size of 3 or 4, and that's not enough to say that there's diminishing marginal returns, which is kind of one of the theories out there. I think that we could be in for a surprise that one of the cycles would just blow out all the past cycles.
What do you think, Michael? Anything?
Yeah, what he said, but yeah, I think zooming out is always the important thing because, it can seem, it almost feels like it's been this long bearish draw out because, 2020 was not as exciting as some of us, may have thought it was going to be. And we're kind of still at where the sort of peak was then. And we're all kind of, waiting for the other shoe to drop. But when you zoom out, you can still see the big picture, and you can see that there has been a continuous exponential trend. We don't necessarily know what that exponential curve is, but there is an exponential curve. And, we still see that happening. And even with these periods, we remain on track. So there's been a bit of a, maybe change in the sort of specific trajectory, but the overall trajectory towards, kind of continuous exponential growth of a monetary network is still afoot, and we can expect more of that. And I think, in many ways, each cycle has its own, forms of excitement. And I think this round is much more interesting with the fact that, or one very interesting thing about it is the fact that we have kind of entered the global stage in a very serious way, to where you have large institutions of various kinds looking at it in increasingly favorable ways. BlackRock as an example, and I'm not shilling BlackRock, but just observing that it's interesting that BlackRock of all organizations can look at this in a favorable light, and that's now something that we have to contend with. And likewise, we see other organizations like the central banks putting out papers like the ECB has that has a very negative view of Bitcoin because it's succeeding. And so we have entered the global stage, and I think that's going to present a lot of interesting things that back in the day we could have like kind of felt were going to happen in terms of just at some point, if you become a global currency, you're going to be globally recognized, and it's like it's happening, and we don't know necessarily how all that's going to look in the details, but on the big picture, it's happening. We're reaching those new scales.
Yeah, I think the central bankers, there's probably two things going on. One is that in the past cycle in 2020, because of inflation, when they finally admitted that it was happening and they raised rates, that created a tightening environment for fiat monies. In this cycle, they're in a loosening posture where they think they've got inflation under control, so they're talking about lowering interest rates. So that is a huge tailwind for Bitcoin, and they're smart enough to realize that that's a problem for them. So they're writing papers about it. And then the second part, I think, is that they probably get a lot of questions. So, when you hear you're at a bar, they're like, oh, I work for a central bank. I think that even if you're not a Bitcoiner, you'd be curious, like, hey, so what do you think about Bitcoin? And they're probably so sick of hearing that question that I think that when I read the ECB paper in particular, they seem to like have an axe to grind. It was not as dry as academic as you would expect it to be. They were, for lack of a better word, but meh. Yeah.
I think there's a positive side to this where there was also this recent one by the Minneapolis Fed put out a paper that was very negative. If we just make Bitcoin illegal, then our models work in this way. It's like, okay, well, that's your model. Your models are destroyed because Bitcoin's just going to keep on going. But that being said, it's like when you have them putting everything out, they're actually laying out their cards. On the one hand, you can see it's like, okay, they're butt mad, and it's not exactly a pleasant feeling to know that people who are in charge of the large banking cartels are not pleased with you, because what might that bring? On the other hand, it lays out exactly what kind of errors are they dealing with. So what are the real misconceptions that need to be addressed, that we can address, because we have answers to all of these things. We know how this stuff works, and we can answer this intelligently. And so I think it actually presents a great opportunity to get to the heart of where people misunderstand Bitcoin, so we can fix it. So even if they might remain dedicated Bitcoiners, the rest of us, the rest of society can learn about what is happening, and they can join the Bitcoin train and have a good time.
I also think that, like in that ECB paper, what they're really seething about is how much political lobbying Bitcoiners and the wider crypto sphere have been doing, in particular in DC here in the US, probably less so in Europe, because when they talk about banning Bitcoin so that they can continue with their fiat monetary experiment, they need a global ban. And in particular, they need it in the US because, New York's the financial capital of the world. Europe doesn't really matter that much. So even if Europe banned Bitcoin, the redistribution would still happen if they can't get that ban here in the US. And so now they're having to think about, oh, well, how do we persuade the public to lobby against Bitcoin? And I think that they are, the serious argument that they should have been making from the beginning is the one that they're making now, which is that, hey, we live in a democracy. We want money to be controlled by democratic process, and Bitcoin's not that, and it's going to stop us from deficit spending, and it's going to redistribute wealth from politicians and bankers to normal people. And so we have to lobby against it. Instead, they spent the past 15 years throwing out just garbage of, oh, it's bad for the environment and only criminals use it, which turns out that has not really been particularly persuasive. They have not made any progress. Yeah, well, if it was true, I think that it would be more persuasive.
Yeah.
But even a falsehood, maybe you could make a little more progress than they have.
The noble lie.
Yeah, exactly.
It's not been a very noble lie. It's been pretty pathetic.
Ignoble. And it's pathetic because then what they did is they stirred up the opposition, and they caused Bitcoiners to start lobbying, and now they're complaining about the lobbying when really that all started because they were just wholeheartedly attacking the industry with falsehoods. I think if they had attacked the industry with truth of we want fiat currencies, I think that they would be in a better position today, because now they need to go backfill those arguments and say, actually, it's not so much the environment or the criminals, it's just we're trying to protect our monopolistic racket here.
Yeah. It's also just funny because I feel like they've put out papers before saying it's not only is it like bad for the environment, supposedly, or criminals or whatever, but it's worthless. Like they would say it's worthless. And now they're like, actually, wait, it's just unfair.
Yeah.
Well, except, some people from the Fed, Kashkari, recently reiterated that Bitcoin is worthless, despite the fact that it's now been over $1 trillion for how many days straight. Like it's been most of this year, Bitcoin has been worth more than $1 trillion. And, how long does that have to happen before you give up on that? I like to say that, for people also, it's like, oh, it's just a bubble and it's, tulips, it's worthless, so it's going to go up and then go down. And it's like, I think you only get to use that argument once. You get to have your one bubble, and then if it goes back up again, you need to come up with a new way of talking about it.
Yeah, there's no real historical examples of asset classes that have repeat bubbles back to back 4 years apart. And then so what they resort to in the ECB paper is saying, oh, it's because these people have religious beliefs. They're religious about Bitcoin. That's their final argument for why Bitcoin's value has not gone to zero, is that we're just as zealots.
You have full faith and credit in the Bitcoin network. It's,
yeah, exactly. In God we trust.
Yeah, it's a very funny situation.
Yeah, definitely. Would you guys say that, over the last 15 plus years, are we living through hyperbitcoinization, or is that still something that would occur in the future?
I think hyperbitcoinization can be characterized as two different things.
Okay.
One is the inflection point of, that if we're looking at an S curve or a black hole metaphor, that there's a point of no return, and that fiat just goes to zero and Bitcoin becomes the global money. And so that would be the point of hyperbitcoinization. The other is to characterize it as more of a process that started on day zero. And when Bitcoin went from $0 to being worth $1, that was hyperbitcoinization. When it went from $1 to $10, that was hyperbitcoinization, and so on and so forth. And so we're living through that process. This is what it looks like. And there might be, there's still, even in that way of looking at it, there's still a tipping point where things really accelerate, perhaps. but it's a process of monetization that happens in stages, because an asset can only go up in value so quickly, because the old holders, they go and rebalance, and much to the chagrin of the ECB, they go buy a Lambo. They steal purchasing power from the rest of the economy, and so by virtue of that, it puts a ceiling on how fast Bitcoin's growth can be, and that's what creates kind of the tops of the cycles.
Yes, I think that's very important to look at it in those two ways, because the first one, when you just have that inflection point, that's also a place that, it's that's where it does start to get, kind of, a religious vibe to people who are, not as into Bitcoin, because it can feel like, oh, it's like, the eschaton is going to happen. That's the rapture or something like that. But I think focusing on the long-term actual process is much more interesting. It also explains why we would expect that second one to happen in the first place, which is important to understand. We don't want to just, everyone's going to wake up and we're into Bitcoin. There has to be a process of how we actually get there. And so by focusing on that, we can actually explain it and then say, and here's why, we can expect one day it might be the case that people wake up and they only want Bitcoin. Mm-hmm. And, the ideas came from, there's an old Conrad Groff post about hypermonetization, and he was talking about it in a sort of an inverse of hyperinflation. So hyperinflation is when a monetary base is collapsing because they're printing it off so faster than people, can retain their sort of belief in it, so to speak. And so you have, the crack up booms and stuff like that. Whereas monetization is a very different beast, because it's actually people adopting a new thing. So it's not a collapse; it's a growth. And so this is sort of the seeds of the concept of hyperbitcoinization. And if you go read the old article, you'll find this stuff, but it kind of gets lost in the fun of the meme word itself. And in that hypermonetization process, it is kind of this reverse of hyperinflation, in the sense that rather than that collapse, you actually have a rapid economic growth. It's an upgrade for people rather than this collapse.
In this frontier moment, Michael is talking about the concept of hyperbitcoinization. But what exactly does hyperbitcoinization mean? Michael explains it as the reverse of hyperinflation, where instead of a currency collapsing from overprinting, people adopt Bitcoin, upgrading their economic system. Imagine it like a software update. It's not about the old system necessarily crashing, but about users choosing to install a superior system that offers better features and benefits. One by one, people and businesses gradually upgrade their economic operating system to Bitcoin. And now back to Pierre and Michael.
And I think there's some very important things there. One is it's happening in a marginal process. So we actually have to look at that gradually before we understand the suddenly. And it's like, what is that gradually? It's like people marginally, making the choice at the margins to improve their money. And when you start to have that, the benefits of that money growing are going to be at an exponential rate. Mm. The other thing is that we can actually see that hyperbitcoinization has happened in practice already, even if we haven't gotten to that point in the global S-curve. And we can look at, what are the definitions of hyperinflation? And I might be getting this incorrect, but I believe it's 2 or 3 months of sustained 50% inflation. Of CPI or whatever for a country. And if you go chart Bitcoin, I've done this before. I should make an updated one. But when you chart, you can see many episodes of hyperinflation, or rather hypermonetization of Bitcoin. You can know where it is because you see it on the graph. It's pretty obvious. But that is an actual hypermonetization event. And by any definition by those definitions of hyperinflation, when we change the denomination of money, when you think of your money as Bitcoin already, and you've entered that Bitcoinized future already, when you look at that and you look at the dollar, all you see is effectively hyper demonetization of the dollar. Now, it's not hyperinflation in the sense that the dollar is literally printed out of control, even though obviously we've seen very out of control printing, but it's more the fact that there is that massive economic shift from the dollar to Bitcoin. And we see that over and over with the dollar and every other currency. So in that sense, even with not thinking about the inflection point and bringing it to that sort of gradually part of the long curve, we still see what can be called hyperinflation by sort of standard economic, the way that the Fed would discuss such events.
Mm-hmm. Thinking about that, like the quote unquote like extreme deflation of Bitcoin, do you think that's going to be an argument that the Fed and the ECB are also going to start using eventually? Like if Bitcoin's soaring, they might be like, this is bad for you. Like this is going to destroy the economy. We're all going to, businesses are going to shut down. Do you think that that's an argument that they're going to start making?
I mean, this kind of is the ECB argument, right?
Well, I think the ECB's argument's about redistribution. But the deflation argument, that was brought up by Paul Krugman in 2011.
Yeah. Bitcoin is evil.
Yeah.
This is his article.
And he's basically arguing that, Bitcoin's going to fail because its value is going to increase too much, which should have been a signal to the readers of the New York Times that they should, FOMO in. Yeah. In 2011, mind you. Like, this is way, way early. And yet they didn't. They should have taken Paul Krugman seriously.
And now you're about mad.
Yeah. Now they're like,
at least the ones that continue to not listen. There's probably plenty of New York Times readers out there who, well,
yeah, maybe they have readers. Okay, but I think that they'll bring up that argument too. It's more challenging for them because now there's this widespread perception of, oh, okay, Bitcoin's going to coexist with fiat currencies. And so in that ECB article, they're making the argument that even if it does not replace fiat currencies, if it's just increasing in value on the sidelines, like a tertiary asset like gold, that it does represent a redistribution of wealth, of purchasing power. And I think they're right. I think they're right. I think it's funny, though, that central bankers don't spend a lot of time thinking about the redistributive effects of fiat currencies.
Yeah.
So, there's very scarce literature on that topic. But then suddenly they discover the Cantillon effect when it comes to Bitcoin.
Yeah. It's pretty funny. What do you guys think about the future of Bitcoin custody? Like we have in the context of self-custody, collaborative custody, and then like banks and BlackRock custody in Bitcoin. Like how do you guys see this playing out over the coming decades?
So the way that I tend to think about this, because I think these kinds of discussions can easily get into very binary thinking, in the sense that people look at it and they think that you either have a future where literally everyone is self-custodying every single sat in the universe, all 21 quadrillion or whatever it is, and then you have people who think, it's all going to end up in third parties, in custodians and so on and so forth. And I think it's important to sort of step back and kind of break through the binary thinking by instead thinking of, what are the specific problems being solved by what kind of way of interfacing with the Bitcoin network. And, self-custody is a way to, widely reduce all kinds of risks, the financial, obviously, just from saving, a lot of security stuff, because having a third party custodian, you're really just outsourcing the security, and there's all kinds of risks of them getting hacked, of your account getting hacked. So like their systems being completely fine, but your password wasn't strong enough. So there's still all kinds of risk, but you get the comfort of passing it out to someone else, even if you haven't really reduced those risks. Nick Szabo writes about that in Trusted Third Parties or Security Holes, and I think that's a very important point. But, so when you self-custody, you know what you have, and you can run your own node, and you can see everything, you can verify everything, you can set up a multi-sig if you want to have, jurisdictional separation between them, or just, any kind of geographic distribution so that you're, more impervious to different kinds of threat models. But so I'm a huge proponent of self-custody, and I think everyone, in the long run, that does represent the Bitcoin standard, if you will, of how to interact with Bitcoin. That being said, we also have to look at what are the marginal problems, or problems at the margin for various entities, and between the different costs of having to do things, which we continually find new ways of operating that kind of reduced costs, if it's batch transactions, making it easier to get sums of money into different wallets all at once, and so on and so forth. But you have this problem where, well, for an individual, it might be super easy to get set up with self-custody because we don't have a lot we have to think of in the grand scheme. We don't have a lot of, different operational problems of financial controls and all of this that a large business would have to take on. So for that, I think for large businesses, there's also still this problem. It's like we're only starting to get to a place where we can start to think about real self-custody for a serious entity. We have things, Unchained, sponsor of this podcast, has collaborative custody and the sort of multi-institutional model. And that's one way that I think this can go about. But for those, it's not necessarily as simple as waking up and wanting to throw a bunch of Bitcoin on a cold card. And so we have to think from their perspective, how do we get them there? And I think in the long run, we want to work towards how do we actually help corporate governance structures also use self-custody, because they can get the benefits of that and reduce different risks as well. But I don't think it's as simple as a problem of individuals and small families. And so I think the future is one that's very diverse in dealing with all the different ways that people want to use Bitcoin. Some, if you have long-term savings, that's going to tend towards cold storage and self-custody. If you're doing a lot of payment stuff, there might be reasons there that you tend towards, custodians, just because it adds all kinds of bells and whistles to your ability to go transact. So I think there's a lot of diversity, and I don't want to take one team over another while recognizing in terms of trying to impose it as a blanket imposition on everything. Instead, I want to understand what are the risks as a whole? How does self-custody kind of meet all of those risks in a sense? And then look at all of the problems and see what are the ways that we can chip away at this problem to make it easier to get all of those things to self-custody without assuming we're going to just get there tomorrow.
Yeah, I agree with Michael. I'm non-binary too, and I'm pro-diversity as well. And I think that people engage in some kind of catastrophism when they think about this, where they're like, oh, if we don't have everyone with their own UTXO on chain and a custodian gets hacked, then Bitcoin's reputation will be so dirty that, Bitcoin will collapse and nobody will want to use Bitcoin anymore. Meanwhile, it's like, okay, well, let's look at what happened in Bitcoin's history. Okay, Mt. Gox. Okay, did everyone give up on Bitcoin after Mt. Gox happened? No. Even though some pundits thought that the experiment was over.
I'm sorry to interrupt, but I think a lot of people, especially if they're newer, probably have not really considered the proportional size of the Mt. Gox event. Mt. Gox was holding, I forget the exact numbers in total, but, we're talking a very, very large percentage of the entire Bitcoin economy, whereas even something like Coinbase, with all of the ETFs, still remains, I believe, a smaller proportion of the Bitcoin economy than Mt. Gox ever was.
Yeah, I think that's right. And so I think that it's okay for people to learn the hard way, right? And if Coinbase gets hacked tomorrow and everyone loses their coins there, Bitcoin continues to do what it's always done. And I don't think that there's a macro risk. I think it's just purely a micro risk of individuals and the risks they want to take. And so when people get ideological about we have to figure out a way to scale Bitcoin so that each person has their own UTXOs, my reaction to that is maybe not. I don't know. I look at transaction fees. Sometimes they're high, sometimes they're low, and so it doesn't seem like there's a constraint there. The bottleneck is not so much on-chain bandwidth as it is people's fear of volatility. I think that's probably a bigger bottleneck than on-chain scaling, and then just general education. So the other part to Michael's point is that if it's just a small amount of value and people want to hold it using a custodian, so they want to use, like, for example, a Lightning wallet that is custodial, I don't really see that as being a huge problem other than the privacy angle of, well, now the custodial wallet knows what you're spending.
Secure your retirement with a Bitcoin IRA from Unchained. Right now, get started with no setup fees and enjoy your first year free. You can open a Roth and traditional Bitcoin IRA and even upgrade old forgotten 401ks and IRAs into tax-advantaged Bitcoin where you control the keys. Get started today at unchained.com/frontier. There's no better way to hold tax-advantaged Bitcoin for decades. That's unchained.com/frontier. And now back to the show.
But it's really important to note that there are people doing startups and developing whole business models around, doing non-custodial payments or having different trade-offs. And so, including custodial startups. So, for example, Celsius, Mashinsky, he'd go and say, "Oh, so many Bitcoin have been lost by people trying to self-custody." And I think I've heard CZ say that, from Binance's perspective. And so people should always remember that everyone's selling something, everyone's a scammer. They've all got their angle on, the product that they want you to use. And so they're going to FUD other products. And it makes it a really difficult information environment for folks. But do your own research and find a set of trade-offs that works for you. I think that the most important part about for Bitcoin is that it is you can opt out, right? So if you don't want to custody with a third party, you don't have to. I think that freedom aspect is far more important than what percentage of Bitcoin are being self-custodied or not.
In fact, I would argue, you could even say, I would say, like, it's depending on how you want to frame it, you could also say it's opt-in to custodial, right, in that the Bitcoin network doesn't even recognize a custodian versus a non-custodian or anything like that. It just sees what are the keys that are locking up these coins, or, what is the hash lock or whatever. And so you get to have full choice of what you want to do. And, I have some level of faith in people that they will find the things that they, that best suit the needs for the problems they face. That's why I'm a free market guy.
And if they don't figure it out, they'll lose their Bitcoin. I mean, it really is, you can learn the hard way. There's no rule against that. And to your point, I like to remind people, all of the Bitcoin are self-custodied. Okay. There's no Bitcoin that are not self-custodied.
It just might not be you.
Yeah. Right. Yeah.
Fair. What do you guys think about Bitcoin banking? I don't know if you guys watched the Saylor and Saifedean podcast where they were kind of discussing it back and forth. How is this going to play out in terms of JP Morgan eventually probably will be custodying Bitcoin? Will they offer yield on it? How do you guys think that would work? Or what are your thoughts in general?
I think it goes back to, people being able to choose. Now, I think that it's an interesting debate because on one hand, you have the Fiat bros who are like anti-Bitcoin banking because they don't want people to have access to Bitcoin in any way. And they want to have capital controls and prevent people from converting dollars into Bitcoin. And banks would be a really convenient way to convert dollars into Bitcoin. So I think that arguing against them is important. And then on the other end, you have the paranoid crypto anarchists who are like, oh, we don't want banks doing Bitcoin either. And we want people to have to buy Bitcoin on the street corner, and possibly get robbed. Like I don't see that as like a inherently better solution of, oh, we should do everything, P2P in back alleys. So I think that it comes down to what would be great would be, you can go to JP Morgan Chase, you can convert your dollars into Bitcoin, you can copy paste the Lightning address in, and that you can withdraw your Bitcoin to your Lightning node, or even to your cold storage or whatever it is, and that people just have the freedom to do what they want to do, and that JP Morgan Chase would be competent enough, just like Coinbase has been, that they're not going to just willy-nilly lose all the Bitcoin, and that people can live their lives in freedom.
In some ways, the more annoying thing with JP Morgan is this whole time they could have been like basically a more scaled up, highly capitalized Strike or something of the sort, Cash App, Strike, all of these great apps that, Bitcoiners broadly use. But they have spent so much time and energy over the years, on the one hand, calling Bitcoin a scam, and on the other hand, working on all kinds of completely asinine blockchain projects and just wasting millions and millions of dollars. And all of that engineering effort could have been going towards actually building this infrastructure that would have helped all kinds of people kind of get their foot in the door on the Bitcoin economy, and they didn't. So these banks are being slowpoked. So I enjoy the fact that Bitcoiners were able to come in and build our own infrastructure first as a way to just kind of see it's like what do we actually like as Bitcoiners. But I do expect big banks are going to learn from that, and everyone's going to want Bitcoin. So every JP Morgan Chase customer is going to want Bitcoin, and at some point, Jamie Dimon will have to bend the knee and provide that if he wants to, really retain their business at the highest level possible.
Mm-hmm. What about the concept of yield in particular? Like, do you think JP Morgan will be doing like fractional reserve banking and lending it out to other people, or do you think that they will be custodying it all 100% full reserved? How do you guys think about that?
They're welcome to try. Many have tried. So I think that the nice thing about Bitcoin is that when they inevitably fail, they won't get bailed out because the Fed can't print more Bitcoin. So I think, and that's something we've seen in the past, whether it's with FTX or Celsius or others who have tried to do the fractional reserve Bitcoin banking. They're free to do so, but there's no bailouts in Bitcoin, and that's probably something they're not used to. And that they'll learn the hard way. To Coinbase's credit and others as well, like Kraken, for example, they've been focused on being 100% reserve because they realize how hard it is or how impossible it is to have that model. And I think that it intuitively makes sense to folks that, okay, well, if you can't create more Bitcoin, like where does the interest come from? Like you have to have some kind of money printer to have interest. Technically, that's not true from an economic perspective, but from a left curve grug brain, that's actually correct.
Yeah, it's like in some ways, it's like Bitcoin itself is not generating the yield in the sense of like Bitcoin itself is not the productive asset that actually creates more economic wealth somewhere. Rather, it's the good that's being used to trade for those things that allow that to happen, allow things to get repriced. And because of that, you get a yield in Bitcoin in the sense of more sats.
And so it leads to this criticism of like, well, if you don't have any lending and you don't have any credit, like how will the economy function in a Bitcoin world? And I think that's probably my favorite part about Bitcoin is that it won't have that, and that everyone will have to finance things out of equity, and that
it turns out you can also save up for stuff.
Yeah, retained earnings. It's a thing, and you can totally finance your balance sheet using that.
I am not a finance brain. I'm definitely on the left side of the finance curve. I'm the Greg brain, but from my perspective, all financing starts at self-financing, and that begins with having retained earnings, or savings to build that on, and anything else is kind of coming from that. And so, I think it's good that after being in such a what would we call it, the high velocity trash fiat economy, it's nice to kind of get back to basics and focus on how to actually kind of rethink how we're structuring things.
And then they're like, well, okay, then you're going to have less demand for producer goods, right? For capital investments. And there, I think that they're violating Say's law of markets clear. And so if there's less credit available to finance productive assets, the price of productive assets will go down. And so then that's a self-correcting thing, because now the yield on those productive assets increases because their price went down. Just like if a bond's price goes down, the yield increases.
Yeah, if right now all of those capital goods are being deployed in factories, making things, making trash that people don't want, and they decide they no longer want it because they'd rather hold on to a Bitcoin, it is not good for the economy for that trash to be continued to be produced. So it's actually a good thing for people to be able to reprice things. And now it's like, well, hey, we can use those parts for this and that factory. You can use those parts for this, and so on and so forth. And now the economy can take all of the resources that make up those capital productive entities and move them towards what do people actually want. And the fact that they are not making a return in Bitcoin terms means that they're by definition unprofitable. And it makes no sense to be encouraging people to continue doing unprofitable business just for the sake of it.
Yeah. Yeah, it seems like a lot of the problem around the yield discussion is like in fiat world, you have this idea of like a risk-free yield, whereas like in Bitcoin world, there isn't a risk-free yield. It's like if you're going to earn a return on top of your Bitcoin, you have to take risk. Like it's hard.
But I also think the risk-free yield in the fiat world is a scam. It's actually, to me, it's fraudulent disinformation that the SEC should crack down on. But because the SEC belongs to the same state apparatus that is issuing the so-called risk-free debt instruments, somehow they can get away with the false advertising. You've got duration risk. Okay, so you might think, well, duration risk, that's not a big deal. It took down Silicon Valley Bank. They were holding treasuries, and then interest rates went up, and then they were underwater. And then, of course, you've got currency risk. Yeah, you'll get paid back. We don't know what the value of the dollars you're getting paid back in will be worth. And so I think that we have to get rid of the notion of risk-free yield in general, because it doesn't exist in general. And that really what is risk, it's not so much risk-free, it's holding money is the least uncertain, right? So it's not uncertainty-free, but it is less uncertain than holding any other asset. And that's kind of what the underlying premise of money is. And that's what the utility of money is. This is something that the ECB could not wrap their heads around when they were writing this paper on Bitcoin. They're like, either a currency is good for payments, and then they're like, well, Bitcoin's not good for payments. And so they had it both ways. They were like, Bitcoin's too volatile for payments, it's too cumbersome, it's useless for payments, but also criminals love using Bitcoin for payments. So which is it, right? Like, and the reality is that criminals actually don't like using Bitcoin for payments. They like, if anything, they prefer stable coins. The data reflects that they use tethers on Tron far more than they use Bitcoin, because criminals don't like volatility either, it turns out.
In this frontier moment, Pierre is discussing how criminals are shifting away from Bitcoin in favor of stablecoins. Contrary to the old narrative that Bitcoin is primarily used for crime, recent data shows a different picture. One of the most recent studies by a blockchain analysis firm revealed that about 70% of illicit transactions now involve stablecoins like Tether rather than Bitcoin. The transparency of Bitcoin, the volatility of Bitcoin, and the advanced tracing technologies have led criminals to prefer more opaque and stable alternatives. This shift reveals a surprising irony. As Bitcoin becomes more regulated and transparent, it's actually pushing criminals back to the shadows of traditional finance. And now back to Pierre and Michael.
Especially because criminality tends to be very high time preference. So why would they want the volatility?
Yeah,
it's only a low time preference group that's going to be able to hold through that kind of volatility. But if you do a criminal act, you probably want the loot then and there.
And when we look at the history of criminal activity with Bitcoin, they always get caught when they try to spend the Bitcoin by sending it to an exchange to convert it into dollars because they're high time preference and they want to go on a bender or whatever. And then, the ECB, they're like, okay, so it's not good for payments. And the only other use case is speculation. And so to them, like the idea that you would just hold money for the utility of minimizing uncertainty, that's just speculation. And so and speculation's inherently, it's barren, it's useless. And so this is a debate that goes back hundreds of years in the history of economics. And it's one that Austrians, I think, have decisively won. But the ECB, because they can't accept that, they're going to have a hard time wrapping their heads around why people are adopting Bitcoin, and they have to resort to, oh, well, it's just a religious belief, and Bitcoiners are pagans.
Funny. What do you guys think about MicroStrategy? It's been like a hot topic, the stock in particular, recently over the last couple of weeks. It's trading at like a valuation that's like higher than the amount of Bitcoin that they hold on their balance sheet. Is it overvalued? Is it undervalued? Obviously not financial advice or anything, but just thinking about it from first principles, what do you guys think?
I'm not a stock trader, so I have very few opinions other than if MicroStrategy is gaining returns on Bitcoin, that is a phenomenal thing. It's a very hard thing to do, and more power to them as a business. But I don't have any particular feelings other than it does feel in many ways like a speculative attack of you borrow dollars, you buy more Bitcoin, rinse and repeat. That's sort of exciting to see that, so many years after Pierre's article on it, we see more of this happening at larger and larger scales. It's not just people doing that with their student loan debt. It is, giant companies doing it with billions of dollars worth of value. But yeah, I'm sure Pierre has more nuanced feelings on this.
Well, not really, because MicroStrategy being a regulated security, I don't want to go to jail with the SEC saying, hey, you said this and this. But when I wrote Speculative Attack, I was thinking about like George Soros, like a hedge fund doing this. I wasn't thinking of a public company doing this. I didn't think it would be legal. So I guess it is legal. So more power to Michael Saylor. And I think that it's astonishing how effective it's been. And some might argue it's been too effective, right? Now he's accumulating too many Bitcoin. But more power to him. And I think that he's leading by example. And it takes a lot of guts to put so much faith into Bitcoin and to be accumulating it like that.
Going back to the original question, I think too, it's like, well, they did it. When's the next one? El Salvador adopted it as legal tender. When's the next country? And I think these have showed us like, it's a completely obvious thing in so many ways. Like we look at El Salvador and they're doing so wonderfully. Their Bitcoin stockpile continues to rise by at least one every day. Yeah. And it's doing great things for the nation. It's an obvious play for any country. And same with MicroStrategy. They've shown it. It holds up. It seems to continue to hold up. It's been doing it for 4 years now. It wasn't just one quarter of awesomeness and then went away. But it takes a lot of work to be able to spread the education and get everything aligned for others to do. And maybe there are more companies out there that we don't know of that are doing this, but it takes time. But the fact that you have someone demonstrating it gives us, more reason to believe that others will follow at some point because they have a guide to go by. They don't have to come up with the idea, from nothing. They have a sort of a guide and a playbook to go by.
Yeah, I think that on the nation state point, it raises a really interesting question, which is, we got speculative attack here. Is there a speculative defense playbook here? Because basically, when MicroStrategy is issuing shares and buying Bitcoin and it's accretive, why would the same principle not apply to a government issuing its currency to acquire Bitcoin? The people always assume, well, they're diluting the value of the currency, but they're not looking at the other side of the balance sheet, which is that they're acquiring the highest quality asset in the world. And so those things in theory, they would just offset each other perfectly. But what Michael Saylor is showing is that actually they don't just offset each other. It's accretive, and it increases the value of the asset being issued, whether it's MicroStrategy shares or in the case of a currency. So then in that, if the same principle holds, then there is a speculative defense move where if you want your currency to survive, you have to, as aggressively as possible, back it with Bitcoin by issuing more units of the currency. Maybe we'll see somebody do that. El Salvador does not have their own currency. They do have their own debt, and I saw that recently they're working out a deal with the IMF, so maybe they can borrow some fiat from the IMF to buy more Bitcoin.
I think also, ideological sort of libertarian attitudes, sees central banks do that. And it's like, oh, that'd be terrible to like watch what you're describing. But not only like terrible, but in a sense of a sort of disbelief of like, why would they do that? But from their perspective, whether good or bad, they want to milk the cow. They want to, if you want the Cantillon effect, you have to have wealth to be siphoning off in the first place, and you don't kill the milk cow. And so if there is some risk out there to the milk cow, and you can spend some amount to, put up a fence to keep out, a predator or something, you can keep that going. And so from their perspective, even in ways that not everyone would enjoy, there is a benefit from their perspective to be engaged with Bitcoin. And, as the adage goes, Bitcoin is for enemies. And this is one of the reasons why, is because any group is going to want more Bitcoin, even if they're not necessarily your most friendly neighbors.
Yeah, it makes me think that the ECB paper, if we read it between the lines, what they're saying is, we'd love to buy Bitcoin, but we don't want to enrich these people. And so they're painting themselves in a corner out of pride, right? They should be a little more humble and say, okay, well, it's in our interest to buy Bitcoin. Yeah, we don't know how to make these people rich, but what choice do we have?
You know French, so Christine Lagarde can always give you a call.
Yeah,
bonjour, Pierre.
Well, I thought it was funny that they in their paper they're like, the Bitcoiners, they don't really ever explain why Bitcoin's uniquely suited. Why is Bitcoin better, literally better than stamps from the 19th century? Which I was like, guys, come on.
They're bananas, they're baseball cards, they're tulips.
And then saying Bitcoiners never explain, they never differentiate why Bitcoin's better. And it's like, our DMs are open. Just ask. We have explained it lots of times. We've recorded a lot of podcasts. We've written a lot of books.
Visit my website. It's like we have this information there. We're happy to educate anyone who wants to know.
But if it's too hard to sort through all that
within U.S. sanction laws.
Yeah, exactly.
No, that's great points for sure. What do you guys think about the models? Like last cycle was stock to flow, massive model. Everyone kept talking about it. Now it seems like a lot of people are talking about the power law model. Now we have like Saylor's Bitcoin 24 model. Like everyone's trying to model the price of Bitcoin. What do you guys think about that?
I mean, I like models, quantitative models. Despite being an Austrian, I think people are like, hey, you're not allowed to have hobbies. You're supposed to only read Mises. I think it's a heuristic that is creates boundaries, right? Because back to the first question, I had unrealistic expectations coming into Bitcoin. I thought that it was going to the moon, next year. And I think that if we're going to look at these models and complement them, it's that they put a ceiling, right? Of, okay, well, here's, it can't really go higher than this according to this model. I think it's funny that critics of the model go the opposite way of, hey, the problem with this model is it's creating a floor and it's creating, it's creating too bullish of expectations. And that's bad for people because then they'll buy Bitcoin and then they'll be disappointed, which Yeah.
There is something funny to that, because there's a lot of people that they want to manage expectations, and they always want to manage expectations to the downside. But with Bitcoin, we do also have to keep in mind that we have to manage expectations to the upside. It's possible that we do wake up one day. It's not, I'm not saying that's happening tomorrow, but it's not impossible for everyone to wake up and finally, for whatever reason, grok Bitcoin and want it, in which case the price would absolutely skyrocket. And so things can also really go up to the upside. And in fact, for most people who weren't operating with these kinds of models in their head at some degree, even just as a sort of implicit, speculative thought that they had about the future, they're going to get shocked by, Bitcoin for the past 15 years running into that. So I think it's important with all these models. It's like, it is not economic truth. I always, even I was a big memer when it came to stock to flow, because I think qualitatively it's a very fascinating and important topic within trying to understand money from a praxeological nature. And it also just so happened to have a lot of we could see a lot in how Bitcoin was actually progressing. That was like, this is actually fairly interesting to look at, in a fairly interesting, very interesting way to be thinking about Bitcoin into the future. But the difference there is, it's not the model creating truth. It's that it's our understanding of truth that's helping us make sense of the model. And I think as far as having it as a hobby, as long as you have that, you should not look at your model and think that you are coming up with God's law, because you are not. We are always faced with uncertainty, but all of us do have to look into the future in some way and use our understanding to come up with some belief structure of how we think things are going to go, because that is how we go about making choices. So I think it's a matter of properly scoping what a model is and is not for these things that can help people, have fun, maybe even succeed better than they otherwise would, maybe lose a little more than they otherwise would, but not lose their pants in the process.
Well, I mean, to that point, the specific actions that you take should be identical, whether you read all of the Bitcoin source code in C++, beginning to end, versus you looking at one of these models. You shouldn't do anything differently between those two approaches. Your conclusion should be, okay, well, I'm going to run a node. I'm going to, self-custody my Bitcoin. I'm going to spend less than I earn, and I'm going to stack sats. I don't understand why people think oh, well, because, if you look at the model, it'll create a mind virus that will cause you to go leverage 100x because Bitcoin's going to go up and you're going to get wrecked.
Well, with the stock to flow model, this was what it was. This belief. Oh, you're going to be buying too much and so on and so forth. So you're going to do something of the sort that you just described and lose a lot. But for me, it's just someone. It's like, I'm not trying to change my investment patterns on this. I'm just trying to enjoy watching the markets and try to kind of think where the markets are going, but also think on a qualitative perspective, is how does this relate to how monetization happens? When I saw that, it did manage expectations in the sense that, yes, it's going to go up, but it's actually, given this, it's possible that we see a cycle go up a lot, but that's not the end of Bitcoin. And we see this happen all the time, where it's like, oh, it's going to 10,000, therefore it must be, Bitcoin is the winner and it's all done. The dollar is dead. Actually, no, there's a whole new cycle, and now we're sitting at 60,000. And it can happen multiple times, and the time that it takes can be much longer. And when that started to set in of even with an extremely bullish model like this, you can start to see that the curve really can take a long time to work society through and work that monetization process through. It actually made my perspective even more boring of stay humble and stack sats, because you have that much longer. If Bitcoin was going to, 100K or whatever people believe it's going to go to at this point, and it's going to stay there for 4 years, that's a lot of time to do a lot of savings. And yes, it's not going to be as much Bitcoin as the previous cycle, but you can do a lot of stacking in that time period, do a lot of good saving. And then the next cycle, it'll have gone up, and you just keep doing that. And there's a lot more. If you have that humility, there's a lot more that you can get out of it. So I don't think that the models themselves don't inherently lend themselves to any particular investment strategy, because there's many ways to look at a model and think about, how you want to act. And I agree, as someone who got into Bitcoin specifically for the fundamentals, it's like, well, from the meme perspective, I think that, maybe it's not good to go all in, stock to flow and have fun with that and focus more on the fundamentals. But there's still plenty of reasons to think about these things from a, just kind of what is money and how does monetization happen?
Yeah, two more thoughts on that. You've got the fiat bros who are like, Bitcoin's going to zero. And I think that it's great to point to a model, whatever it is, any kind of model.
Rainbow charts, power, time, whatever it might be.
Non-binary models. And to point to, okay, well, here's a quantitative model. Here's kind of the data. What data are you using to show that it's going to zero? What?
Especially because they tend to be the ones who are not qualitative in their economic thinking. They think that economics is this big, science experiment, and we have to look at the data and such. So the fact that they don't provide that is a little frustrating.
It's not backed by anything.
At least we can show a model.
Yeah,
it might not be a good one, but it's a model.
And so I think it's good for trolling fiat bros, because it's basically you're projecting out into the future, and they hate seeing any chart that doesn't have Bitcoin's price going to zero next year. And so if you show them, oh well, in 20 years it's actually going to be at $1 million, it drives them nuts. The other part of it too is that people say, oh, you look at this model and obviously you should sell at the top. That way you can buy back in at the bottom, right? If you're bullish on Bitcoin. And this goes back to the ECB paper, because, okay, I sell at the top, and what am I buying? Okay, I'm buying fiat or whatever, but it's not providing the utility that I was getting with Bitcoin, with holding Bitcoin, which is that the source code is open source. I'm running my own node. I'm self-custodying my own keys. Mm-hmm. So I'm not getting that utility anymore. And now I have to hold the bag on this fiat, or the S&P 500 or whatever this other person wanted me to hold while I wait for the cycle to turn around. And you're up at night because you lack the utility of holding the least uncertain asset in the world. And that's what was also completely lacking from the ECB paper is, what's the alternative? I'm not going to hold 19th century stamps. Okay.
Mm-hmm.
That doesn't do anything for me. Or
20th century money.
Even worse. Yeah.
It's like if you try to time the top, you're hoping for a greater fool to buy your fiat bags.
Yeah. And if they think that if there's going to be a thing like that too, that itself is a redistributive process insofar as it does happen, where people have that wealth effect and want to spend money. That's actually how Bitcoin ends up in the hands of anyone who's there to sell them something that they may want, but they're jealous because they're trying to sell a pretty useless fiat currency.
Yeah, you make it, and I've heard you make this point before, which is that the ECB is portraying this as the Bitcoiner who sold their Bitcoin and bought a Lambo. They're the ones that have profited from that trade, but really,
they've lost out.
Yeah, it's the opposite. They're the ones.
They're stuck with a Lambo now, and some lucky pleb who knew just they probably want a Lambo. He got to scam them into getting some Bitcoin. So it's actually it's a win-win. But you have to have the entrepreneurial foresight, the entrepreneurial drive, and the ECB doesn't have that. They want to rest on their laurels of monopoly privilege, and it's just not working anymore.
Yeah, I mean, it's hilarious. They look at the pizza transaction and they're like, you took that pizza from someone else who could have had that pizza. And so now you're redistributing wealth. And meanwhile, everyone's like, why did you buy the pizza? You should have held the Bitcoin.
Yeah, so good. Two more questions that we can start to close it out. What's something that you believe that a lot of Bitcoiners would disagree with?
I'm sure I could find, all kinds of ways of saying things that would make some group mad, because Bitcoiners, it's not a monolith either. So it's an especially difficult question. It's like, which group do you want me to upset?
Yeah, it's supposed to be a cult where like we all believe the same thing, but meanwhile,
no, we're all mad at each other. We all love each other, but all mad at each other at the same time. So it's a tricky one. I think one thing that I might say is and there's certain mindsets around Bitcoin that I personally, it's not for me, which is kind of going on with the sort of revolutionary view of Bitcoin per se. And what I mean by that is not Bitcoin that it's a fundamental shift and stuff like that. It's in a sort of scientific paradigm sense. Yes, it's a revolution. Although even then, it's all built ultimately on economic principles that we've known for hundreds of years. Instead, and the reason that I push back on that is it can lead to sort of ideology that makes people upset even when you're winning. So it's like, because somebody is not self-custodying, they get upset and, Bitcoin must be failing. Because it's supposed to be this revolution where we completely change things. And I think thinking about it from a more I don't even know what the other word I would use would be, but going back to thinking about things of people solving problems at the margin and thinking how that gets solved, we can both actually think about how people really today need help, which at this moment for everyone might not be self-custody as much as we want to get them there. And at the same time, also be able to look at the past and think of things that we do not like, but see, in a Chesterton's fence kind of way. Is like, this fence exists. We want to make sure we understand the fence before we knock it down. And so we may ultimately knock it down. I think that's something we're going to have to do with central banking and it's in the process. But at the same time, we can think about, what was this solving for who that this came to be? And there are many institutions like large banks that it's very easy for us to look with antagonism, but actually large banks inherently are not necessarily our enemies. It's with the introduction of central banking and fractional reserve banking that they can have a parasitic relationship. But otherwise, we can look at, what were the actual problems banking were solving and praise where it was actually being solved. Also try to think, how can we learn from that to build something even better? But use it as a very productive a way of looking at. We're always trying to construct rather than destruct. So the revolutionary kind of thing, when I'm saying that, it's like an attitude of wanting to burn things down or expecting collapse or whatever. And, I want, I think a lot of things need to be liquidated. But just as we were talking about earlier, when things are liquidated, it doesn't mean we burn them. We don't go take the scraps of wood and go burn it. We find furniture that we can build out of it. We try to make something constructive out of it. So I like to encourage people to have a more constructive attitude towards things, which hopefully would also overcome some of the antagonism between different factions as well.
Yeah, I mean, to go off that, I think that there's a minority of Bitcoiners who have this view that, okay, we know Bitcoin's anti-fragile, and therefore we want everyone to attack Bitcoin. And that way, Bitcoin will achieve its highest purpose and its greatest value if, all the Bitcoiners, the government goes and arrests all of them. That way, it'll be black market money, and
we
that's
can't
really
spend
cool.
from jail.
Yeah, they'll be like, hey, you're.
Although with open dimes and everything, maybe we
the
can.
Real purpose of Bitcoin is to be jail money. It's and it's not supposed to be part of the banks. Or they'll say like they want Coinbase to get hacked so that people learn the hard way, or they want Bitcoin mining to be banned so that it becomes decentralized. And it's on one hand, it's like, okay, the ends don't justify the means, first of all. So, we can't advocate for state violence like that. And second, why are those ends good? Like they're not, it's not like it's intrinsically good to like decentralization is not an end in itself. Decentralization is a means, and also it's a counterfactual. It's okay, if the government bans Bitcoin, here's what will happen. And therefore the government will say, well, that doesn't really get us anywhere, and so we won't ban Bitcoin. And so it's just about the game theory. It's not about here's the outcome we want. We want people to have to be underground and so there's kind of this bizarre we shouldn't lobby the government because we want to be sneaking around and to live in a dystopia so that Bitcoin is cypherpunk. I think that's kind of nonsensical.
Yeah, I want people to learn the easy way, but I recognize that some people are going I can't control people. People have free will, and they are outside of my control. And so some of them might unfortunately learn the hard way. Even me, with my own beliefs, there's chances that I can learn the hard way as well. I'm not impervious. I'm not perfect. And so from that perspective, it's like I want people to learn the easy way, but I know that inevitably someone's going to be learning the hard way. But I don't want them to have to. It's just a recognition of that's an unfortunate tragedy that happens, and we have to roll with it and learn from it and be ready to help people who deal with it.
Mm-hmm. Last question, we can close it out. What do you think is the biggest risk to Bitcoin?
You want to go first?
Biggest risk to Bitcoin. I mean, so if we take the meaning of the word risk literally, I mean, obviously it's the purchasing power. And so that historically has been very volatile. So have transaction fees been very volatile. But it comes down to a question of time preference. And then how do you manage that risk? Well, by holding more Bitcoin, it turns out, is kind of the best way to manage that risk. If we think about it more of like on an uncertainty level, I think that the biggest challenge right now is these KYC AML laws. And in the United States, the Bank Secrecy Act is unconstitutional. Mm-hmm. And so already, they're walking on thin ice. So they have not been able to push their luck and to try to make things worse. But I think that's something we have to be very sensitive about and cautious about. And ultimately, we've got to get that Bank Secrecy Act ruled unconstitutional by this marvelous Supreme Court.
Which, by the way, like on my point with banks is you wouldn't have needed the Bank Secrecy Act if banks were inherently, as an institution, just constitutionally by their nature antagonistic towards their customers, because things like the Bank Secrecy Act force them to be taking more information about customers than they would like. Sort of, in many ways, I mean, what is the ideal banker? But, the Swiss bank, it's like you just come in with a number, Jason Bourne style, and it's like, okay, here, sir, and take you to your, little vault. That is another model. And so, that's a great example of that's something that is in there that makes everything worse for everyone except the people who are able to parasitically gain from that. I think the other big, thing, this is one that comes up often and I think is very true, is effectively apathy and a lack of knowledge and understanding. And that's not to mean that I expect everyone in the world to have, a deep, super, understanding of everything with Bitcoin and economics, and they can, recite human action to you and stuff like that. But what I mean is people who are interacting with Bitcoin should have some level of appreciation of how this thing manages to do what they need. There's people have a kind of intrinsic feeling around gold, and I think that same sort of feeling needs to transfer to Bitcoin. People have to, if they're going to hold it and hold it for the long term, because that's how we get over the risks, the financial risks of volatility and stuff like that, you have to have a long-term view of it. Well, in order to actually have that long-term view, you need to be able to think through what are the uncertainties that I face that I'm holding this in the first place. How does Bitcoin in particular versus all of these other things that people want to sell me, how does this in particular do it? And that requires understanding. Is like, what is 21 million? Why are there only 21 million? Why is that a good thing for me as a holder of Bitcoin? What does it mean to run a node? Why should I run a full node? How does that help me and so on and so forth. And same with keys and such. And so I think education is one of these sort of primary risks, so to speak, however we want to use that language. And that's why I try to dedicate as much as my time as possible to working on Bitcoin education.
And that's why all of our listeners should go to the Nakamoto Institute and donate to the Nakamoto Institute so that we can get more Bitcoin education. Bitcoin is a tradition. Like the code is just instantiating a particular tradition. And I think that if we want people to really be inculcated with Bitcoin culture, they've got to read what's on the Nakamoto Institute. And the Institute's got to continue to grow and, bring light to the world.
Yeah, absolutely. It's definitely a lot of great articles there. Helped me with my personal Bitcoin journey. But guys, thank you so much. This was awesome. I really enjoyed this.
Yeah, thank you.
Thank you.